Meanwhile, Europe faces a bit of a reality check as its weak auto market is set to face more closures. In the latest move, Audi takes the center stage as the firm is considering closing the Brussels plant. Analysts say that this move in fact indicates the troubles afflicting Europe's wider electric car industry. Now, amid low demand and competition from China, on September 16th, over 5,000 people took to the streets of Brussels in support of Audi Brussels employees facing job insecurity. The protest led to the suspension of most public transportation in the Belgian capital. Despite a resolution between management and union negotiators that allowed workers to return to their jobs, the demonstration continued as planned. Moving from a train station to a square in front of the European Parliament. Now, Audi, which is a subsidiary of the Volkswagen Group, is facing heightened scrutiny after Volkswagen announced earlier this month that it was contemplating the unprecedented move of shutting down production sites in Germany. The Bloomberg News review of auto data revealed that over a third of the main passenger car facilities from the 5 largest European automakers, BMW, Mercedes-Benz, Stellantis, Renault and Volkswagen, were underutilized last year. This means they produced less than half of the vehicles they were capable of making. In addition to worries that the region is experiencing a long slump due to lagging behind rivals, the closure of sites will heighten these fears. The European market is still 3 million vehicles short of where it was before the crisis hit. This means the factories are sitting idle, and thousands of jobs might be in danger. Earlier, Volkswagen ended the decades-long employment guarantees that German workers had. Manufacturers need to cut costs in Europe if they want to be competitive in the face of a sudden drop in demand for electric vehicles and increased competition in 2 important export markets, which is the United States and China. Chinese automakers, spearheaded by BYD, are making a strong push into the region following Tesla's Model Y's best-selling status last year. The possibility of closures in Europe has risen in recent years. Labor shortages have driven up labor costs, and energy prices have risen from already high levels due to the Ukraine war. The situation looks especially dire in Germany, where automakers and their suppliers struggle with the shift to EVs after leading for decades on well-engineered combustion engine cars. For all the latest news, download the WION app and subscribe to our YouTube channel.